Well, good afternoon. Good afternoon and welcome to another Webinar Wednesday hosted by the Cal State Bakersfield Small Business Development Center. I'm Kelly Bearden. I'm the director of the center, and I'm assuming you're looking at our cover slide right now. Webinar Wednesday, number 329. Got a great special guest. Jay Thompson's going to be in talking about a lot of the legal things that you can do before the end of the year, a lot of the business decisions that you maybe need to be making at this time, and give yourself a little bit of wiggle room toward the end of the year. We'll get into some of those things. We'll talk about a lot of the resources that we have here at the SBDC and a lot of other things. And today, what we're going to do is we are going to jump in with our guest speaker in just a little bit and talk about the year-end options and maybe some of the compliance issues that you are dealing with, or maybe that you're not aware of and you need to be dealing with. So we're going to look at a lot of the year-end options, and those will include tax and legal and some compliance and a lot of great stuff with Jay Thompson. Also, we'll be updating on the SBA disaster relief efforts for the Kern River Valley in Kern County as it relates to the Borel fire. Our capital quarter, which is a regular installation, our capital quarter and economic quarter. Today, our capital will look at actually our market today. Yes, we'll look at the market today. It'll also look at some of the demographics that we have in a survey, and also maybe a last ditch effort to jump into some grant funded program. Economic Corner has some breaking news. We'll talk, as I mentioned, some of the other small business programs. We will have our tools, our information and resources set up to help you thrive. Your questions today will be answered live after the presentations. So please go to the question and answer box to put your question. Our Webinar Wednesday producer, Maureen Busher-Dang, will be working the chat box today. So in there, you will find a lot of the resources, or pretty much every single resource we talk about today will be available in the chat box where you can jump in and grab it for your own personal use. And no poll today. No poll, too much to go through. Don't have enough time, so we are going to reserve the poll until next week. So first of all, jumping into a lot of the things to discuss today, we're going to talk a little bit about disaster recovery and resilience. And I really think it's key as we go through this working disaster and this relief process that's going on in the Kern River Valley with the disaster office in Lake Isabella that is currently manned by SBA disaster personnel, is they have both a recovery and a resilience program. And so with that, there are various areas of relief. The first four are areas of relief that benefit businesses, nonprofits, private nonprofits, homeowners, renters, and others. And as you see by our SBA disaster loan limit, there are a couple of different programs. There is one for if you suffered an actual disaster, whereas maybe your home burned down or your rented home burned down or your business, then there is a program for that. And there's also a program for economic injury, whereas if your business has been impacted, if your sales and revenues have been reduced, if some of the other aspects of your particular business have been impacted as a result of this disaster. So those are the four loans that are available. The key thing here is that SBA actually goes with outside of business. It is the Small Business Administration, but in administering disasters around the country, there are programs that are benefited toward homeowners and renters, and really some really favorable interest rates and terms that are available. For example, some of the rates are as low as 3.75% for individuals. And that 3.75% is over a term of 30 years. Yeah, it's almost like money a few years back when it was much more cheaper and easier to do. So those are the ones for the immediate disaster relief program. So they have the business loans that are for those that were impacted, the economic injury loans. Again, there's an SBA office, disaster office, that's locating out of the Kern River Valley, the Lake Isabella a community center there. And also, one of the things that didn't mention was the mitigation. And really, the mitigation or the resilience part of this whole package is it really gives opportunities that our businesses and nonprofits and homeowners the opportunity to try to mitigate or prevent future losses from natural disasters. And, if they had 20% of the verified physical damage, you had a little bit of damage, homeowners can actually borrow up to $500 and put into effect measures that will prevent them from a wildfire affecting their property again. And so some of the uses for this I could see as being, maybe some hazardous fuel reduction, maybe actually some disaster space around your property, some of the space that keeps away the fire from actually getting so close. So a lot of ways that you can mitigate future damage is if you are in an area that is prone to disaster. We've been talking a lot about the beneficial ownership information. And our special guests will go over that and provide updates, because I know that there have been some things in the news saying you need to file, you don't need to file. We'll get it all from our expert later on today. Moving on to our economic corner. And our economic corner is that slice of the general economic coverage. Sometimes it's regional and local. But today it was announced that nationally, the inflation rate increased to 2.7% in November. So why is that important for small businesses? Well, it's notable because this happens to be a trend that is happening after a lot of either falling rates or actually a flat rate for most of the year through August. The trend now has appeared to reverse and it's been going up. The Federal Reserve hopes to keep the interest rate somewhere around 2%. And what that does is that facilitates drops in interest rates. So if you have, say, an SBA rate that is, or any other type of funding that is variable by nature, then what can happen is you will find that basically those rates have been rising over the years as interest rates increased. But now many of those will be coming down, and they might be coming down slower if that 2%, 2.7% interest rate continues to be a little higher. So it's definitely something to be mindful of. We have had 2 reduction cuts that have reduced rates by 0.75% over the last few months. And hopefully those trends continue to at least help some of the profitability of our small businesses. Well, we'd like to talk a lot here about some of the programs and grants that are available. There's a couple of things on our regular feature, Capital Quarter. And today our items are going to be a couple of items. We're going to give you a reminder of a Verizon grant for $10,000 that we'll talk about now. And then in a few moments, we will look at some of the partner data that we received and discuss some of our demographic information for those that participated in the Federal Reserve Credit Survey last year. So first, let's go to the Verizon grant, and basically the LISC, Small Business Grants, which are sponsored by Verizon. And basically, they're particularly available in under-resourced communities, and they offer business and financial along with educational resources. So the program hopes to provide small businesses with financial resources and digital tools to help them. It's up to $10,000 that can cover a wide range of activities such as rent, payroll, and other areas. There are requirements, of course, to try to get this $10,000. The applicants must be based in the U.S. There should be a preference toward some underrepresented community, and that could include rural, veterans, women, people of color, etc. So a lot of different ways that you can qualify as an underrepresented community. The COVID-19 pandemic and other economic challenges should have negatively impacted the business. So what you need to do is I would first Google it and go and see what Verizon will tell you. And what they'll tell you is you can create an account on their Small Business Digital Ready platform. It's completely free. And also complete at least 2 courses coaching sessions or counseling sessions through the SBDC, and then put that in the platform, which will unlock the application process, and then proceed on to do that particular application. Now, you only have 9 days left because the round of funding closes that we're currently discussing on December 20th. But it is an opportunity for small businesses to gain financial assistance and also, reach out to the SBDC or other providers in assisting a particular boost and actual benefit your particular business. So at the SBDC, I think that we're really fortunate to have just a plethora of tools that we can work with our clients. We frequently talk about these tools during, or at least I do, on our beginning segment. There are some phenomenal tools here that really can benefit businesses in so many different ways and shapes. So one that we will talk about that we haven't had the graphic on is our quality risk management field book. And you'll see that in the upper left-hand corner. The upper left-hand corner has the quality risk management field book. And so if we were to click on that particular tool that we have, we would find that it's a field book that is authored by SBDC Emeritus Advisor John Pryor. And John was a veteran of the insurance industry for over 40 years, and also worked with small businesses in trying to reduce their risk factors. And so he's worked with a lot of small businesses, non-private government tools. But really what this is it's not a textbook, it's a field book. So it's for work in the field and working with small businesses that actually help you understand where your risks are, the management that you need for those particular risks, and the best way to offset that. And really kind of helps you control the process when we're talking about insurance, which in many cases is very difficult to obtain or very costly. So it kind of gets you kind of in the front seat of trying to actually move on from particularly issues that you might have with insurance. So that's one of the tools that we have. Another tool that we had on there was the 2024 Small Business Credit Survey. And this is done by the Federal Reserve Bank. It's done across the country at their banks. You see at the bottom where basically 9 larger cities that run from Atlanta to San Francisco across the country. So these banks every year do a credit survey to small businesses of which they really want to find out, and then they provide us. And we really need to extend a big thank you to those of you that participated in this particular survey last year, because as of having, 110 or so sampled individuals, we get a subset of the national data that is our partner data. Now, they've asked us not to share a lot of the specific data with external groups, but there is a slice that we can go over that I think I feel comfortable about, and that is going to be the demographics of those of you who replied to this. And this was basically available during the webinar, during Webinar Wednesday, and many of you clicked on and answered the multiple questions of about 40 or 50 questions to try to understand where some of the opportunities and some of the challenges are in funding small businesses. So thank you all for doing that. One of the things that we have is our subset of data, which is about a sample size of 100, and the US firms, which is close to 6,000. Is a lot of the information, and I'm talking about demographics today, and those are demographics of those of you who chose to report. So the age of the primary owner. So basically what we see is that 7% are under 35, and a much larger, if you look at the first 3 categories that go from under 35, 35 to 44, and 44 to 45 to 54, you'll see that those are all significantly higher than the national average. So our primary owners are younger. So that is one thing that's very important. And looking at the geography of our particular region, of course, we looked at the map earlier and we saw the Central California region and the Central California area. So our geographic area is a little more rural maybe than some areas, but we're pretty proud of the fact that our rural component is literally 50% higher than the national average. So at the SBDC, we do want to get out into our rural communities, and we do want to serve those underrepresented members that might not be near one of our local centers. And this is kind of a indication that that is happening. And our third and final slide I'll go over today, and this was on the race and ethnicity of the owners. And what we see is that by the categories defined by the Federal Reserve, you have non-minority and minority. And the non-minorities are 80% on a national level and 20% minority. Whereas if you look at ours are virtually, as close as you can get to being 50-50. So we're actually serving a lot of minority business owners throughout Central California. So those are a few things that I wanted to share with you on our Capital Quarter and go over those particular issues. So another way to actually get better service is actually to sign up. And you can go locally to our CSUB SBDC.com, and that will allow you the opportunity to sign up and work free of charge with one of our one-on-one experts. So you can discuss what your particular issues are. You can sign up online. It's a 5-minute process. Feel free to go ahead and do that. And while you're doing that, let me introduce today's special guests. And our special guest today is Jay Thompson, and he is the lead business advisor at the CSUB Small Business Development Center. He's assisted clients since 2011 in all phases operating and growing a small business. Jay's been recognized with several awards, including the coveted SBDC State Star. He also has won Center Impact Awards and has really, let's jump to that big number at the bottom line. Jay has helped his clients raise over $100 million, according to detailed records kept by the regional SBDC office. $100 billion, that's $100 million. $100 billion, that would be a story. But maybe that's for next year. So it's been great having Jay available to our small businesses in our community. And with his wonderful background in taxation and legal aspects of incorporating some of those three things, let's bring in Jay right now. Jay, thank you for joining us, and take it away.
Well, hello, everybody. It's great to be here with you today, and excited to share with you a little bit of information. So the first thing we wanted to talk about is the BOIR. Now, we've been talking about this for the past year, and it seems like not every day, but at least every week I come across business owners who are incorporated or have an LLC, and they do not know what the BOIR is. So basically what it is a beneficial ownership information report. So this is required to be filed. If you had an entity created before January 1st of this year, you have until January 1st of 2025, it's coming up, to file. If you created a new entity during 2024, you have 90 days to comply. And why do you want to comply? Well, the penalties are stiff. It's adjusted for inflation. It's up to $590 a day for non-compliance. Now, some people have been asking because they've heard in the news that there was a federal judge in Texas that put a stay on the filing requirement. And even though that is true, most of the people who I've been talking to in the know say, that's probably temporary. You might as well go ahead and comply so you don't get caught at the end with a mad rush trying to file. So who needs to file, right? So this is for small entities, limited liability companies, again, corporations, whether C or S corps, limited partnerships, and professional corporations. So basically, if you have a state registered entity, you need to file. General partnerships are not required to file because they are not state registered entities. Also, there are size exemptions. So if you are a large business, which they define as a company that has more than 20 full-time employees, gross receipts or sales exceeding $5 million, you are not required to comply. If you need help or further information on this, or you're not sure about it, put in the chat, I need help, and we'll reach out to you and see how we can help you with that.
Okay, Jay, great. One thing I want to ask you on what is actually FinCEN and why is that the purpose of why they're doing the business ownership report?
Yeah, so FinCEN is the Financial Crimes Enforcement Network. So anybody in the investment industry, banking, insurance, they're familiar with that because they go through trainings on that. But basically, they're looking for money laundering. There's a lot of people that set up these little LLCs and corporations, and they would run money through them and launder their money, and that's what it's all about. Just trying to clean that up.
And also on that, there is information and you do file with FinCEN, which is a government agency.
That is a government agency. Now, be mindful that if you just put FinCEN in your Google search, there's 4 pay companies that'll come up first. And if you don't make sure it says fincen.gov, they'll file for you, but they're going to charge you a fee. This is free to file. So you shouldn't be paying anything.
And one last thing is, I'm sure with a lot of other things, there's scams out going on.
I don't know of any scams. I mean, if you click on one of the pay for filing services, it's not really a scam because they do the service for you, but it's something that you don't need to pay for.
Okay, so but be careful, tread carefully.
And in advance, you're going to want to have some information available to you, your entity information, the EIN, and you want to scan your driver's license for yourself and any members or stockholders of your business, because that needs to be uploaded.
And if I do this, it takes me what, 20, 30 minutes if I do it myself?
I would allow an hour just to be safe.
Okay.
Depends on how many members and stockholders are in the businesses. If it's a single member LLC, it'll go pretty quickly. If there's multi-members or multiple stockholders, then you have to upload the information for each one of them, which gets time consuming. And sometimes the system, depending on the time of day, I've found that like midday, it's very busy and it takes forever. When I've been helping clients, we'd start like 5 o'clock in the morning or late in the evening to do it, and it goes through pretty quickly. So the next thing we wanted to talk about is compliance and formalities. So a few years back, the state of California put the entity formation process online. They made it very simple to file your articles of incorporation or your articles of organization for your entity. And we run across pretty much every week at the SBDC, people say, hey, I have an LLC, and I'll go online to the Secretary of State's website to review their filing, and they haven't filed their required statement of information. Now that is something that's a follow-up. Once your articles have been approved, that needs to be filed, and basically you're just affirming the information you already told them. And there's another fee for that. For LLC, there's a $20 fee. For a corporation, there's a $25 fee. That statement of information must be filed within 90 days to avoid a penalty. And then also it has to be filed again annually for a corporation and biannually for an LLC. The next thing that we see as far as corporate formalities is people say, well, I have an LLC or a corporation, and they don't have a business bank account. Well, that's another part of having that. So you don't really have an LLC or corporation just by filing the articles. That's just like the first part of many steps that are going to follow. You also need an operating agreement for your LLC, or you need bylaws for your corporation. Now, with the LLCs, the state of California doesn't have a statute that I'm aware of that says you have to have an operating agreement. If you have an IRS audit, or if you have a legal issue when you go into court, the first thing that needs to be seen is your legal binder with your documents. And if you can't produce that, they do what's called pierce the corporate veil, and they come to you personally. So I should say, don't take this as legal or tax advice what we're talking today. I'm an advisor, but I'm not an advisor. This is really to give you information and education so that you can further look into your own situation. But you need to be mindful of these things because they have become an issue for many of our clients and other clients also outside our system.
Jay, quick question. Uh, if I have a corporation and I'm not sure if I'm in compliance, what's the best way for me to find out?
Well, one, you should talk to your legal professional, make sure that the person that helped you set this up has followed up with all these things. Also, you can go yourself to the California Secretary of State's website. It's sos.ca.gov. You go to business entities, and then in the business search, you would put the name of your entity. If that comes up and on the right side, you see a little red mark that's showing that you're out of compliance and what you're out of compliance for. So it's pretty simple. It's probably the biggest problem is it's not something that you do all the time, but it does need to be looked at occasionally, and probably at least annually would be a good thing to do.
And lastly, what are some of the issues that I'll run into? If I think I have my corporation in good standing and I'm not in good standing, what are some of the governmental services or some of the other impacts that I might have? Like, can I still use the courts and things like this?
Well, the issue that, and what made this apparent to me that it was a big problem is that when we would have clients that come for funding and say they want an SBA loan or just a loan from their local bank, first thing the lender does is pull up your entity online to see if you're in compliance. They'll also want to see a copy of your operating agreement or your bylaws. So before you get to that point, you don't want to go to a lender and then say, hey, I'm a great business person and I need a loan. And then they say, well, let me see your bylaws, and you don't have them. It's just kind of egg on your face. You want to take care of that before the situation arises. Other than that, you would have to talk to your legal advisor on what kind of problems you might have. Okay, so we're going to talk a little bit about year-end tax strategies. Small business owners, they work so hard to create income, and then they let it go through like a bucket with holes in the bottom of it. And one of those holes, that's your tax liability. So there's so many things that you can do to reduce your tax liability, and you want to be mindful and aware of those. So the bottom line is it's not really how much you make, although how much you make is important, but what is really important is how much you keep. And if you're not taking all your proper deductions that are legally allowed for you, or you're not doing some tax planning to minimize your tax liability, you're losing dollars that are going to be gone forever. So one of the things year in that you can do is prepay expenses. And it is legal and ethical to do this. You can deduct up to 12 months of qualifying expenses. And again, examples are prepaying your rent. Personally, I did that last year. I paid the year in advance in December. And number two is insurance. And there's other things you could probably come up with. I would talk to my tax advisor before I do this, because you don't really need to pay things in advance that aren't going to give you a tax benefit unless you want to. Another thing that quite often can be done is postpone billing or reduce your taxable income by that. So what do I mean by that? Well, there's two types of accounting systems that most people use. Most small business owners are going to want to use what's called a cash basis accounting. And some will use accrual, but that's usually a larger business. With a cash-based accounting system, when you receive that cash, that's when it's posted on your books. So for example, if I have somebody owes me money and I bill them this January or after January 1st instead of today, that moves that income into the next year. The same thing with the expenses. You can also go out and use your credit card to buy maybe a computer or something that you need. You can write that off this year, even though you're not planning on putting that equipment into use until next year. So, and I don't suggest people go out and buy things or necessarily spend a bunch of money on doing things just to get a tax deduction. But if you need the equipment, then it's a good thing to do. Oh, new startup plans. So there are credits available for startup retirement plans for small businesses. You are required by the state of California to have a plan in place if you have 5 or more employees. But again, talk with your tax advisor if how these credits would apply to you and if they'd be a benefit for your business. One of them is a small employer contribution credit of $1,000 per employee. So what these things really do is offset the expense of setting up these plans. So it's really something to look into. Excuse me. It's also something where you could reduce your taxable income in 2024 if you get it set up before the end of the year. It gives you an opportunity to shelter some of those dollars from taxes. Electric vehicle credits. So those are still in play. They're up to $7,500 on qualifying purchases. But again, I would recommend you sit with your tax advisor because sometimes it's better with a business to lease the vehicle than to purchase it. So you want to do the math and weigh both options before you make a purchase. Bonus depreciation. So everybody's heard about people running out and buying a brand new big old truck so they can have a big tax write-off. Well, it used to be 100% on the bonus depreciation. Now it's down to 60%. And again, that's something that you might want to sit with your tax advisor first. Excuse me. But if you need a vehicle or if you need some large equipment for your business, that's something you could do before the end of the year. You don't have to receive the equipment, but you need to pay for it in advance. And there's many other changes that we're expecting for 2025. So you just really need to stay informed. So it's easier to plan in advance than to look in the rear view mirror, next year when you're trying to file your taxes and figure out what you did. So there's a big push for businesses that have customer data that you protect that data. Cybersecurity insurance is recommended. Simple things you can do is using strong passwords and multi-factor authentication. You need to have for many industries are now required to have what's called a WISP plan, which is a written, I used to know the acronym, but it's a written plan basically stating how you would handle a breach if there is one. You want to make sure that your employees and staff know or educated on things that are going on and online threats, and keep regular backups of your data. And again, the reason that it's so important and why it matters is you got to safeguard your financial clients' information just to make sure that they're safe.
Okay. Okay, fantastic stuff. One thing I might add on cybersecurity, Jay, and that is with cybersecurity, one thing that I think we're learning is that they're changing a lot of the password requirements that are coming up. And one thing that we're seeing is that there's the potential for 16-digit passwords moving forward. And that is going to be a particular issue for those of us that really like our 8-digit or 10-digit passwords. So it seems like it was going to jump from up to 12 relatively soon, and then perhaps even go to 16. But long passwords that maybe implement, unusual phrases or words or other things like that seem to be kind of popular in that area.
Yeah, password phrases are kind of key. One of the things that I've been doing lately is I have several professional licenses. I use my license numbers as a password, and that way I memorize them.
Okay, good to know.
All right. A lot of websites now, they'll require you to update or change them every 90 days. So you kind of run out of things to say, and you got to think outside the box, come up with something that you can keep fresh and updated.
Well, here's a great opportunity for some of your legal and tax questions to be answered by our expert, Jay Thompson. We're going to jump into the Q&A box and look at the first couple of questions that might have come up. Is there a requirement to be a Verizon customer or expectation to adopt Verizon services? My understanding is no. So you do not have to do that. I think it's a reach out. I do not believe it's part of the process for seeing who's awarded a grant. I don't know that for a fact, but I would assume that it is not, and I think it would be an issue if it was. So as far as the Verizon grant, I do not believe that you have to be a Verizon customer or have any expectation to utilize Verizon services in the future. And Jay, the next question is going to be on sole proprietorships. Are sole proprietors required to comply with the BIOR?
No, it's state registered entities, so LLCs, corporations.
And so again, the big thing is, the problem is you've had a lot of illegal activities and bad actors that have kind of hid behind some corporate shells and LLCs. And what this is doing, this is providing who the owners of those smaller LLCs, corporations, S corporations, etc. Correct?
Correct.
Okay. How often does the BOIR have to be filed?
So it's a one-time filing. If you have a major change of information, it needs to be updated within 30 days, such as an address change, partner change, that kind of.
Okay, great. So if I'm a new entity, how soon do I have to do that? If I'm starting a corporation, Kelly's Corporation, you gotta love it. Starting it on January 1, 2025. When do I need to file the report?
You have 90 days to file the report, but I would recommend you do it right away.
Okay.
Yeah.
And one of the key issues there is there has been an injunction that has been put in place, and Jay and I have discussed this. It was filed by one of my favorite entities, by the way, the National Federation of Independent Business. But I don't know if it's a complete service or a disservice. They've filed it on constitutional grounds. But I think, as Jay mentioned earlier, what you might find out is that they could lift that injunction. And then if they lift the injunction, it's going to just roll right to the date that it's due, which is January 1, 2025.
Right. And the argument is people say, well, I don't want them to have my information. Well, they have it anyways. It's just being put into a neat package in one spot. So.
Okay, great stuff.
There you go.
Okay, well, we'll come back. And if you have a question for Jay, go to the Q&A box and put it in there. In the meantime, what we're going to do is we're going to jump into the chat box and look at all the fine work that Maureen has done in the chat box today. And after we get by the greetings and salutations, we see the SBA website for disaster relief that is there, and the address of the Isabel Senior Center, 6401 Lake Isabella Boulevard, to help those that have been impacted. There's information on the Digital Ready Verizon grant, the $10,000 grant. There's our information, our link to sign up for no-cost SBDC services, access some of those many tools in the toolbox that we went over earlier. Maureen has also posted in there the Corporate Transparency Act, and that is the legislation that created the necessary business ownership information. And that particular filing, we cut the question already on how often the BOIR needs to be, and I've always called it the BIO. I always get the report part or leave that part wrong. Written Information Security Plan. Jay, what do you know about the Written Information Security Plan?
Well, it's required for many businesses already. So I'm a registered tax preparer, so I'm required to have a plan, sort of IRS requirement. But it's also a good idea to have such a plan if you're handling customer sensitive information or keeping it on your computer or whatnot, just to protect yourself.
Okay, great. And also a link to our Google page. Please leave a review for today on our Google review. If you ever have a problem or issue with our SBDC services, please contact me directly. Love to talk to you about it. Actually, I wouldn't like to, and I very, 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 very seldom do. So, but that option is available. Okay, so last chance, jumping into questions and answers. Here's a particular question. Where does liability begin or end when assisting entities in filing their BOI? And just to go on a little bit further, for example, if I assist in a BOI filing compliance and that entity decides to use a different accountant, then will I be professionally liable and disengage that particular entity? Jay?
I would talk to my E&O insurance provider and see if you're covered or not.
And E&O again is?
Errors and omissions.
Okay.
So I've heard the argument on both sides. Some say you are liable, some say you're not. Personally, what I do is I'll assist our clients by going to the website and they can type in their own data and submit the report. I just kind of guide them through it. So.
And this was a topic that came up very early in the process, probably over a year ago, to where should SBDC advisors become involved in this particular process, and what is the liability as well? And it's really, I think that's a great answer. You know, check with your risk management specialist, your insurance that you have, and to see if you're actually covered, if there's any flow back from that. So, you know, one thing we didn't talk about, Jay, is the ERC, the
Employer retention credit.
correct. And we've been getting a lot of feedback from the IRS. It ended earlier this year. It has kind of been the stepchild of pandemic relief, and it probably should be. Given the fact that you're getting a tax credit that goes back to 2020 or 2021. And the IRS is still wading through the applications for that, whereas they closed it earlier in the year. They are still approving and looking forward to that. So if you are looking at a employer retention credit that you had filed for 2020, 2021, Jay, with those ERCs for individuals that have done that, didn't we run into a requirement that the very nature of filing that ERC tax credit forced you to go back and amend your tax returns for 2020 and
Right.
2021?
That is correct. And the IRS is auditing those now. And that's where some of the big scam, so to speak, came about, is there was companies that sprung up that were helping people file for that credit when they didn't have employees or the number of employees. So they were overstating their employees, fictitiously making false tax filings, 941s and whatnot, and submitting those to get the credit. They were rushed during that time for the credit, and they were just processing them based on the information that was given. Nothing was reviewed really at that time other than what was in front of them. But now they're doing audits. So it is recommended that if you are a business and you had somebody, outside firm, do that for you, do the filing for the ERC, and they overstated the employees you had, you better hurry and amend those returns and pay back that money, because you're going to be better off doing that now than waiting for the IRS to come and audit you, and then the fines and penalties will be larger and stiffer.
And there was an amnesty period that we went through. I have heard, you know, potentially there could be another amnesty period. I think with, you know, politically what is going on, I think that is something that is kind of in a hold pattern. But there was amnesty at one time where you could go in and actually give that back. And those of you that were on the webinar when this was probably 2 years ago, you heard me come on here on Wednesday, and I had a dialogue. It was more of a running monologue from somebody who was marketing me on behalf of not the CSU Bakersfield Small Business Development Center, but the entire university, CSU Bakersfield, telling me that we really are entitled to this credit, being a nonprofit, and that, you know, actually I should apply. And so I would come on and share the emails, and I would explain that, gee, you know, I might not be a tax authority of Jay's ability, but I do know a lot. And I do know that if you have a tax credit, that even if it's refunded immediately, like the ERC was, a tax credit is supposed to be a credit against taxes. And the last time I checked, California state universities did not pay income taxes. So some real red flags, and really going out there. So I know exactly what you were talking about, Jay.
Yeah, a big problem with the ERC is for some of my clients that did apply for it, say you had an S corporation, which is a pass-through entity. When you receive that credit, then one, the wages that you took the credit on were not deductible. And then two, that credit created income for your business, which would flow through to your personal tax return. which meant then you would pay additional income tax on your personal tax return, which quite often would take a large, nice, beautiful credit and shrink it down to about to there. So it was still a positive, net positive, but it wasn't what you thought you were going to get in the beginning.
Okay, we have another question here. Can you share info on a recent request concerning the EIDL loan to update and provide all my business information for the loan? I provided this upon application, and they are stating that they don't have my business name, address, etc., as they never entered into the processing when doing the application. Well, I'll start with this and let Jay finish it. There were, as far as we're probably talking about on this economic injury disaster loan, we're probably talking about the COVID-19 EIDL, of which there were approximately nationwide about 3.8 million applications that were funded. And this was done in different tranches and in political times. Some of them were underwritten, some of them were not underwritten. And so a lot of different variability. There were a few things called the EIDL loan that were turned into $10,000 grants and a few programs like that. But for the standard EIDL program, they should have your information. I agree. And you should have an account that you can go to. And what I would recommend, and we haven't shared this number in a long time, but there is an 800 number for the disaster program, and it's probably the same one we're working with the Lake Isabella fire. But you could probably call somebody there. There were scams going on with people trying to get information on EIDL. I hadn't heard of them recently, but you should have an account that you can go to, and you basically My SBA, something along those lines, and where you can jump in and you can see the balance, you can see the payment and everything that's going on with your EIDL.
Right.
Now, all that being said is, I still think that the EIDL was one of the greatest programs. I'd be on record for saying one of the worst was the ERC, but one of the greatest was the EIDL program, even though it needed to be repaid. And really, there's a very high default rate that is happening, or well, I don't know if they've actually defaulted yet, but as far as the repayment ability on that, it is a rather significant rate. And there are consequences for that particular loan not being repaid. There could be some judgments and there could be some liens. By any way, shape, or form, if you can repay that EIDL, even if you're having difficulties, maybe it's even selling your business. We've actually seen businesses sell that had an EIDL loan that sold higher than their value because they had funding in place for 30 years at 3.75%. Yeah, sure, it's only down to 25 years now. But what you see is you have long-term funding that can actually be assumed as part of that purchase of that particular business. And that's a good way for people to perhaps move on from their EIDL and move on and transition away from their business. Jay, your turn.
Right. I would be really careful because the SBA should have your information. That would sound like somebody that's phishing. Go to mysba.gov and make sure you're registered to have access to your account, and or call the SBA directly. When you call the disaster loan telephone numbers, they answer rather quickly. So it's not like you're going to sit on hold forever, but do follow up. I wouldn't just willy-nilly give my information out because it might not
Definitely
be.
not.
Yeah.
And then again, with all the developments that happened during various phases of the pandemic, there is a possibility that maybe your information was maybe not transferred from one system to another, but I would definitely use caution before providing that information.
That's a good word, caution.
Caution. And caution is the word of the day, apparently. And looks like we're out of questions. Okay. So we'll hit the chat one last time, and we're chatted up, we're questions answered, and we're going to put a wrap on webinar Wednesday number 329. So any last comments, Jay?
Yeah, I'd just like to follow up on your corporate and LLC compliance and formalities. Many people, if they don't try to do it themselves, they might use an online service to do the filings for them, which that's okay. But do talk to a legal person. Have an attorney review what's done there. you don't want a fill in the blank operating agreement or bylaws. It just doesn't look good if you have a legal issue when you got to go to court, or you have a tax issue and the IRS is reviewing it and you've written things into a boilerplate form. It's just, in my opinion, it's something that's worth to spend a little bit of money on and make sure it's done right.
Excellent advice. Okay. Well, that'll do it for this week. We'll be back next week. Another great webinar. Webinar Wednesday number 330. But this one's going in the can. If you want to review it, it'll be on our YouTube channel probably in a couple of days. That's CSUB. SBDC is our YouTube channel. You'll find nearly a few hundred of our webinars there in the past. And so for Jay Thompson, I'm Kelly Bearden. Everybody have a fantastic day out there. Goodbye, everybody.
Bye.